Good evening, friends. I am Rajendra Kumar from RK and Friends channel. I am retired Deputy General Manager of Union Bank of India. This video is for the Unionites from Union Bank officers who are appearing for 122 and 23 promotions. My dear friends, now we would like to deal with KYC and AML guidelines which are issued by the Reserve Bank of India. Just everybody will have a doubt, why should we have the KYC when somebody is depositing his own money? Friends, there are several anti-social elements. There are several terrorist organizations. To combat, to just counter this thing, the guidelines are issued. There is one organization, worldwide organizations, that is called FATF. You may get question, FATF. What is the full form of FATF? Financial Action Task Force. Around 39 countries are the members in the FATF. These countries meet together and just they issue guidelines because these terrorist organizations, all the thieves, they are just updating every time. Whenever they are doing some mischievous and fraud and other things, we will come with, yes, to counter it. They will come with the guidelines and automatically it will come to the Reserve Bank of India and we have to follow it, up-to-date guidelines. And we, just another important form you have to remember, it is CFT. Combating Financial Terrorism. CFT. Combating Financial Terrorism. We are not countering terrorism directly. We are combating the financials of terrorism. This money should not go to the terrorist or anti-social elements. That is the motto of the KYC ML guidelines. My dear friends, you should remember about it. I told you two forms. One is FATF, Financial Action Task Force. Another is CFT, Combating Financial Terrorism. These two forms, I think if they give it, you have to answer it. The RBI, time to time, they are issuing guidelines. We have one act. What is not AML Act? It is PML Act. Prevention of Money Laundering Act, 2002. If they give Prevention of Money Laundering Act is so years, you have to mention 2002. It was amended in 2005 and 2009 also. It was amended, not the Act. Act is 2002. Prevention of Money Laundering Act, PML Act. My dear friends, as per the guidelines issued by the Reserve Bank of India, you have to remember 4 pillars of the C. That is KYC. 4 pillars of the KYC. You can say the 4 key elements. You may get a question like the 4 pillars are 4 key elements. What are the 4 key elements? One is customer acceptance policy. We will decide whether we accept the customer. That fellow will accept first. We have to accept before opening an account. That is customer acceptance policy. The other thing is customer identification policy. The second thing is customer identification policy. First is customer acceptance, CAP. Second thing is customer identification policy, CIP. Then is monitoring transaction. After opening account, after accepting, after opening account, you should not leave it. We have to monitor it. And then the risk management. There are 4 pillars, we call it 4 pillars. Once again, I remember, you please remember it. Customer acceptance, we should accept the customer. Then we will ask this identification, customer identification. Then is monitoring, we will monitor on daily basis. The fourth one is risk management. How much risk is ever involved in these things? These are all 4 pillars and we have to remember all the 4 pillars. If question may comes, what are the 4 pillars? If you won't remember these 4 pillars, you may not get 1 mark. Okay, with reference to the customer acceptance policy. What is customer acceptance policy? we will not open account for Binami account. Previously, banks are opening accounts for the Binami accounts. One person will be there, he opened accounts for the driver, servants, all these things, and he will do all the transactions. Previously, it was happening. Now it is not possible. The person was signing as on behalf of his driver, servants, and all the people, all his these things, Binami accounts. Now it is not possible. We cannot open a Binami account. We should not. RBI will take action against you. And then fictitious accounts, not fictitious names if they want to account. No, we cannot do it. We should not do it. Anonymous accounts, no. These are all one and same, but still the acceptance policy. We should know what is he doing, what is his income. Everything we should know about the customer. Then only we will go for the account opening form. Then is identification. I told you in the beginning, there are 4 pillars you should remember. Customer acceptance, we should inquire first, and then you look for identification. What is identification? We should tell the customer, sir, these are the guidelines for the RBI guidelines. That is the reason we are asking everything. All your details we should know. KYC guidelines. And then identification. How you identify the customer? There are some officially valid documents. OVD. If they give it OVD, you have to write officially valid documents. What are the official documents? One is passport. Second one is driving license. And PAN card. Voter ID. And Aadhaar. Aadhaar is very, very important. Then job card issued by NREGA. 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 And the last one is any certificate given by the NPR, National Population Register. These are the documents you should remember. These are all the documents. If they give ration card is not a officially valid documents. Any other documents, if they give it, you should remember all these 7 documents. My dear friends, you should remember all these documents. You are working in the counter and you should know about all these things. Then monitoring transactions. We told the third pillar, monitoring after transaction. How you will monitor? You have to do the daily basis. If somebody deposits 10 lakhs and above, that report should go to the department. Which department I will tell you again. That report we call is a cash transaction report, CTR. If they give CTR, you should mention that cash transaction report. 10 lakh and above cash transaction should be reported succeeding month. For if it is this January month, next year February 15th, before 15th, you have to report. Whom you have to report? Okay, this concerned department you have to report. Ultimately it will go to, I will tell you that is name. Okay, the suspicious transaction report. That suspicious transaction report, any suspicious name, huge value. He is a small person, but he gets more amount. He won't say, we have to ask, what for you got this much amount? If he's not giving valid reason, we can say that is a suspicious transaction. That is also should be reported within 7 days. If you notice the suspicious transaction, it should be reported to within 7 days. These are all important. Cash transaction report within 15 days of the next month. For this month, next month, 15 days. 15th is the last date. For suspicious transaction, after identifying within 7 days. And then counterfeit currency report. Counterfeit means the fake note. If you receive 1 note, it's okay. Up to 1 or 2 notes. For any deposit account, it's okay. You can report, you can note down it, and you have to, ultimately you have to report. That is a different issue. But if you receive more than 4, that means 5 and above, you have to file FIR immediately. Counterfeit notes for 1 deposit account, but at one time, if you receive 5 notes, up to 4 is okay, you have to report every day, this one. But 5 notes means you have to file FIR. And these also reports should go to within 7 days. Counterfeit currency notes. Then the last pillar is risk management. Who is having how much risk? This is very important. I think several times, several banks, they're asking these questions. Risk man, who is the risk? What is the risk of this source person? Low risk. Salaried people. All the salaried people, because their salary is fixed and within the salary, the expenses are. This is the salaried account. You know about it. That salary is low risk. You should remember about it. All the low income people, income strata, we can say strata. You can say that PMJDY accounts, low income, this agriculture labor and other people, this lower income. There is no much risk and it can be low risk. And there are government departments, whatever the government departments and organizations, it's a low risk. We will not expect any fraud circling. There's a low risk. And the bank is having long-term relationship, 20 years, 50 years. Long-term he is our customer. Then that is also, you can say it's a low risk category. For medium risk, we have only 3 categories. You should remember all the 3. Fourth one, somebody gives which is wrong, then you have to identify. If you know the subject, you can definitely put the correct answer. NBFCs, non-banking financial corporations. NBFCs is one of this thing. It is a medium risk. Second one is builders. All the builders is second one. Third one is stock brokers. These 3 you should remember about it. This is a medium risk. Fourth one is high risk. There are a number of high risk categories. If they are not coming under high risk or medium risk, definitely again low risk. The high risk categories, some of the risk I would like to mention, but you have to see it. NRIs, non-resident Indian accounts, NRO accounts and all these things, because we don't know their income and other things. All the NRI accounts, NRO accounts, it comes under high risk. High net worth customers, people who are dealing with lakhs, crores, high net worth customers, definitely is high risk. On trusts and charities, this trust, all the trusts and charities, several trusts and charities, definitely we don't know their income and other things. They will come under high risk. On religious organizations, whatever may be the Hindu, Christian, whatever may be the religious organizations, it will come under high risk. Shopping malls, and gold and jewelers and bullion, people who are doing business. And closely held companies, that means only family or the shareholders, closely held companies. Or the partnership firms which are having sleeping partners. Sleeping, they say sleeping partner. That is also dangerous. Organizations which are receiving donations, whatever may be the organization, which are receiving donations from the outside, whatever may be, we cannot count it. That is also high risk. And then political parties, because they are also receiving donations. These are all high risk, and it may be some of the things I'm telling you, you have to read properly. And some of the important things you should remember that any cash transactions, whatever may be, especially DDs and others, if it is more than 50,000, it should route through the account only. You should remember about it. 49,999 is okay. But another thing you should remember, this 3-4 transactions, and more than 10, whatever may be, it's more than 1 transactions, but the same party should not exceed 50,000. Somebody, I think, I have suspended somebody as per the guidelines of the head office, because they should not do it, because he has given 49,000 into 10 DDs. It is against the guidelines. We have suspended it, because please careful about it. 50,000 together, that means combinedly. And at the same time, any remittance to the domestic remittance, more than 50,000, cash transactions you should not accept. Again, it should route through the account. That account should have the KYC guy. It should fulfill all the KYC norms. And cross-border remittance, one country to another country, more than 5 lakhs rupees are equivalent to 5 lakh rupees. It may be dollars, but it's equivalent to more than 5 lakhs. If it is 5 lakh and above, again, it should be routed through accounts. These are the important things. I've been telling that the one organizations, which is very important, which is monitoring all these things. That is FIUIND. IND means India. FIU. What is the abbreviation of FIU? Financial Intelligence Unit. Financial Intelligence Unit. You may get FIUIND, the full form. FIUIND. Financial Intelligence Unit. We have to report all these transactions through our proper channel. Ultimately, it will go to FIU. What is the transaction you should get? CTR, Cash Transaction Report, 10 lakh and above. This is also, you may get one question. Again, suspicious transaction report. And all the suspicious transactions. Within how many days you have to report it? Within 7 days from the identification of suspicious transaction. But cash transaction report, every month, for the succeeding month, within 15 days. If it is January month, before 15th of February month, you should go. For counterfeit currency notes report, I told you, it is within 7 days again. Only once cash transaction report only, next month 15th. But all other reports, within 7 days of the identification. These are the very, very important guidelines. You have to remember it. If you remember, definitely you may get 1 or 2 marks. If you see that today's video, definitely I hope either scale 1 to 2 or 2 to 3, you may get 1 or 2 marks. And I wish you all the best. And my dear friends, kindly subscribe it and like it and forward to your friends. And definitely, yes, even 1 to mark it, why 1 to 1 or 2 marks, while whenever you are getting leisure time of few minutes, it is sufficient to get 1 or 2 marks. Instead of preparing all these things, KYC is spoon feeding for you. All the best, my dear friends, and we'll come with another video tomorrow. God bless you. All the best.